Hi there, Michelle and
Jack here.
We just decided to get really quickly on this video to talk to you about something that just came up. I had a friend from Europe, a wonderful lady, reach out to us and say, hey guys, I'm about to invest in this deal with my husband. And I want you to know what are some of the things that we told her, because we believe that every family, before they invest, whether active or passively, in this case it was passively, you should be asking these questions. So the number thing that we asked her to do was, numero uno, was to go ahead and ask, who are the stabilizers in that project or in that fund? Meaning there's usually in a team, there's quick starts, the accelerators, that people that, are doing the front stage, doing the talking, but who is in the background actually making sure that the returns that are being promised to investors are gonna actually happen. So who's operating that asset?
Exactly, in other words, the operator.
Yeah, the person that is looking at the details, that is behind the scenes, And so my recommendation to her was, okay, can you find out from the management team who's in charge of doing that aspect, of the business?
In their particular case, just saying that it was a single family investment fund that they were investing to. But the same thing when you invest into a multifamily, ask them about the property management company. Who are they? What are they doing? Are they experienced? Are they self-managing? If they're self-managing, do they have the experience to that? Have they done it before? Have they completed the cycle, et cetera, et cetera?
Yeah, and then my next suggestion to her was like, okay, also definitely ask them, what is, once you get on the phone with the stabilizer, with that person that is looking at the details, really get a just for this person's capability, for this person's, skills, experience, track record, and then also ask them, have you had situations or projects in the past where you have failed, where you've made mistakes, and why, and what have you learned from them? Just to see, you want to see and know that you're investing with someone that has some stretch marks and how they've learned from those stretch marks.
Yeah. So having said that, there was nothing in that investment opportunity that alarmed us in the principle.
Yeah, absolutely not.
It was more like we read to the PPM, we read to the brochure, and there were a few pieces that were just not covered there. So it's like, before you invest, just make sure you ask the right questions. We're not saying this was a good or bad investment. It might be the best investment in the world.
Absolutely.
But just make sure that you have those questions. Another thing is like they promise certain returns. And usually when you do we do the same thing in our PPMs. When we do an apartment complex, we promise a certain return. Well, one of the questions you want to ask is like, what are the underlying assumptions? But what are the underlying somewhat base numbers that make you believe that you can actually hit those numbers? Now, when we do a PPM, we actually put down the exact numbers and the assumptions and the things and the forecasts and so on. But in this case, since it was a single family, the thing was buy houses, improve them, rent them, and get a cash flow from it. Well, you want to know a little bit more about what price point, what are the rental rates, right?
What in that particular market.
What is the expense structure? And again, we do that when we put our PPMs out there and our brochures out there, because we do a sample budget. We expect maintenance to cost this much, and this to cost that much, and HR to cost that much, and so on and so forth. So people see that right away. So if you don't see that in a PPM or in a brochure, make sure you ask about that. Because just because somebody says this is going to be happening, it doesn't mean they can. And the other part is you might then want to have it looked at by an attorney too, just from a point of view, as like, what is, for example, your recourse in case they don't hit those numbers, right? What happens in that case? How is it structured? And you won't be able to change the structure most likely, because that's the structure they have. But it helps you to decide yes or no for the investment.
If this is something that you feel comfortable investing in or not. And then my last, suggestion for her was to ask them, how are they preparing in the event that, the market that they're investing hits a recession? What are they doing to mitigate risks? How will they be able to still, under those conditions, perform for their investors? And that was pretty much it. And she was incredibly grateful, filled with gratitude. She's like, I was about to just hand my money over, and I'm so glad that we're doing the right due diligence here.
So again, the investment might be great.
Yeah.
Just make sure you do the proper due diligence before you give somebody your hard-earned $50,000 or $100,000.
So this is pretty much a quick video on certain aspects of due diligence, for sure.
Exactly.
All right.
Bye-bye.